Good morning, everyone. Market movers for Thursday, October 10th, 2013. A couple days ago on Tuesday, with the market down about 4% from the recent all-time high, S&P 500 was at 1725 at that all-time high, pulled back in the 1665 range, or about 4% over that short time period, due to mainly the concerns over the debt ceiling, government shutdown, and a little bit of Fed tapering and a bit of anxiety prior to earnings season for the second quarter starting. The third quarter starting, earnings reports for the third quarter starting, which we actually had start this week with Alcoa reporting on Tuesday. All those things combined together, we had a bit of a pullback with the market, again 4%, especially in some of the areas like technology. The NASDAQ got hit pretty hard as well. So I saw that as an opportunity. My feeling is that the government shutdown will be temporary. We won't default on our debt. And as a result, I think the market will probably rally, and we're actually seeing the beginnings of that today with the Dow up about 177 points so far. So we're having a really nice open and a bounce from the recent lows. And so on Tuesday, I did put some money to work. I've been holding a lot of cash. Those of you who have followed me, listened to me on the radio, or have followed my blog or these video commentaries know that I've been holding a lot of cash for a few months at least. Because I feel like the market's overvalued. I haven't changed my opinion about the market in the long-term sense, but I do see an opportunity in the short term if we do get a vote from Congress to do something about the debt ceiling to avoid default. I do believe the market is going to rally, and again, we're seeing already today signs of that because we're seeing the Dow up almost 200 points just today alone. So, and we were up a little bit yesterday as well. So I did put 20% of my cash balances back to work for clients on Tuesday, and so far so good. Things are bouncing. I'll probably look to trim a little bit of that money if we do get close to a new high or actually make a new high. Also, the potential damage for the government shutdown, even though it's been temporary, may delay the Fed in terms of when they taper. Now, the Fed minutes showed from the last Fed meeting that everybody, at least at the meeting in September, planned on still tapering before the end of the year. But that was before the government shutdown. So now that we've seen the shutdown and the impact that that might have on the economy, even though it's only about 2 weeks old, today's the 10th day, it could be enough to get the Fed to taper. We also had initial jobless claims. This is just for last week, but they did rise to 377,000. The estimate was for 311,000 claims, so it was much worse than expected. And so again, that may push the Fed to delay tapering into early next year. If you could put that together, the two things, a resolution on the debt ceiling that avoids a default and a little bit of delay on the Fed tapering, I think that could set us up for what we would call a Santa Claus rally. Between now and the end of the year, with the holidays coming, we might see stocks rally to, again, maybe a new all-time high. And from where it came down, if we got up to 1750 or so, maybe a 100-point rally from where we were Tuesday. That would be a pretty nice run, and I might take a little bit of money back off the table at that point, depending on where we are and how close we are to tapering. But I think at this point we should see some kind of reasonable rebound rally, and again, we're already seeing a good sign of that today with the Dow up almost 200 points. More to follow.